Can you transfer a 403b to Robinhood? Robinhood doesn't directly support 403b plans. However, you can roll over your 403b funds into a Robinhood IRA, either traditional or Roth. This gives you greater investment flexibility within Robinhood's platform. Robinhood offers commission-free trading and access to a wide range of investments, including stocks, ETFs, and options. This Robinhood portfolio shows how users can invest in diverse assets like stocks and ETFs with real-time gains. Transferring your 403b to a Robinhood IRA provides greater control over your investment choices, potentially allowing you to diversify into higher growth assets not available in your 403b. Robinhood has integrated retirement tools, including automated Roth conversions and integration with third-party advisors, which can make retirement planning easier. For example, Robinhood's Roth conversion feature allows easy tax planning for retirement. There are two main types of rollovers when transferring from a 403b to a Robinhood IRA: direct and indirect. A direct rollover involves your 403b provider transferring funds directly to your Robinhood IRA without any check going through your hands. This electronic transfer maintains the tax-advantaged status of your retirement savings. An indirect rollover requires you to receive a physical or electronic check from your 403b provider, which you must then deposit into your Robinhood IRA within 60 days. Missing this 60-day deadline can result in the rollover being treated as a taxable distribution, potentially triggering income taxes, and a 10% early withdrawal penalty if you're under age 59.5. Direct rollovers are generally preferred because they eliminate the risk of missing deadlines and avoid potential tax complications associated with indirect rollovers. Begin by opening a Robinhood IRA account. You can choose between a traditional IRA or Roth IRA based on your tax preferences. Next, contact your current 403b provider to start the direct rollover process. This ensures funds transfer directly without you handling the money. Provide your Robinhood IRA account number and routing number to your 403b provider. This information allows for secure electronic transfer. Funds will be transferred electronically to your Robinhood IRA. The process usually takes 1 to 2 weeks to complete. Before beginning, confirm eligibility with your plan. Some 403b plans restrict transfers if you're still employed or have outstanding loans. When transferring your 403b to a Robinhood IRA, several key rules and restrictions apply to ensure compliance and protect your tax benefits. First, the transfer must be a qualified rollover, meaning funds move directly between accounts without you handling the money. This preserves the tax-deferred status and avoids immediate taxation. Second, you're generally limited to one indirect rollover per 12-month period across all your IRAs. This prevents abuse of the rollover rules and ensures proper tax reporting. Third, if you're over age 73, required minimum distributions from your retirement accounts still apply and cannot be avoided by transferring. Finally, if you're married, spousal consent might be required depending on your 403b plan's rules, ensuring both partners agree to the transfer. When rolling over to a traditional IRA, the transfer is tax-free if handled directly by your 403b provider. Your earnings and contributions continue to grow tax-deferred until you withdraw them. Converting to a Roth IRA requires paying income taxes on the entire rolled-over amount in the year of conversion. However, qualified withdrawals from the Roth IRA are completely tax-free, provided you've held the account for at least 5 years and are age 59.5 or older. Your choice between a traditional or Roth IRA depends on whether you want to pay taxes on the rollover amount now or defer them until retirement withdrawals. Consider your current tax bracket and expected future tax rates. One major pitfall is missing the 60-day deadline in an indirect rollover. This results in the funds being treated as ordinary income, plus a 10% early withdrawal penalty if you're under 59.5 years old. Another pitfall is the 20% withholding that applies to indirect rollovers. The IRS withholds this amount automatically, so you need to have enough money available to cover it when you deposit the funds into your new account. Roth conversions can be beneficial, but you must have funds available to pay the income tax on the converted amount. Without separate money to cover the taxes, the conversion loses its value. Finally, always consult a tax professional or financial advisor for personalized advice tailored to your specific financial situation.